Let's talk about acquisitive therapeutics. The last medical company I talked about was Endo, and that balance sheet was terrible. I told you guys it's going to go bankrupt. It's a dog with fleas, and look what happened. Will this be another bad medical companies, or is the company's financial strong? We will look at the balance sheet and find out and do our own research into this company. Let's also look at some other key performance indicators and talk a bit about the bull case, in this case the drug development pipeline for this company. If we start off just looking at stock price, development has been lackluster here for the last 5 years, down by almost 90%, so not a good stock price performance. If you look at financials, you see that revenue is slightly above 10 million for each quarter, although they're losing money from operations. There was this weird quarter, last quarter, where they had positive earnings, although that positive cash flow did not come from operations. It came from one of the other cash flow areas. But let's talk about the bull case. Let's go into where there's actually something interesting about this stock and this company. For there's a little bit of a lottery ticket in this. They need a big hit. They need something that sellers can take to the hospital, take to the doctors, and get the doctors to prescribe, something that can be sold in pharmacies, something that drives more revenue. They need bigger numbers. And in the product pipeline, we can see epinephrine and diazepam. As a non-medical professional, I have no idea what this means. But if you are in the industry, maybe you work as a nurse or a doctor or something in those lines, then maybe you have a greater understanding of this type of medicine and can judge whether or not there's a real need for this, if there's a lot of demand in the market for a product like this, if it would be easy to sell, and just get a greater odds on success by investing in a company where you think that this has a greater market fit. This actually solves a problem out there. Me just looking at these numbers, it tells me absolutely nothing. It would be like somebody who's never used a computer before trying to learn Google Ads. So epinephrine, no idea. Diazepam, no idea. But once again, if you're in the medical profession, then you have a higher chance to hit a home run when looking at stocks like this. In terms of SEC filings, we can look at the latest balance sheet here just to get a sense of the financial health of the company. I think this is where I can provide more value to you guys in analyzing the business language here and just taking a look at the health of the company. So we can look at the cash and cash equivalent, these liquid assets. We can see that they have, this is in, let's see if they say if it's in thousands or what it is in. Alright, they don't really seem to tell it on this slide, but alright, in thousands, here it is. Indeed, so this is 26 million in cash, in current assets, cash and cash equivalents. And in terms of what's the current liabilities, because this is what we need to compare this to, we can see total current liabilities 40 million. So these are not large numbers in any sense for a company. This is still a research and development type of company trying to get a home run, and they will be financing using stock or debt, and basically they're counting on one of their products being a success, and then the shareholders will reap the rewards in terms of that. But just looking at total assets, we can see that total assets is about 150% of just total current liabilities. So this is a very weak balance sheet, and I think that they would need to get more financing, either in terms of debt or in terms of issuing more shares in the medium term to be able to sustain the business. So in terms of the opportunity here for investors, this is very much a gamble on the company's drug pipeline development. And who's better to know if this is good or not? Well, it will be somebody who's good at understanding medical professions. But we can see indeed from the balance sheet that the clock is ticking. They have some inventories here that's not as liquid as cash and cash equivalents. When debt is coming due, you can't pay them with your own pills, your own products. They're not going to accept that. They're going to want to have cold hard cash. Of course, prepaid expenses is better. That's maybe rent that they paid in advance. So this is just them being able to float the business for longer. We see property and equipment here. In terms of the hard, liquid value of this, it's not of use to banks really. Right of use assets is a better post in that sense. That's a little bit leaning into leasing. And then intangible assets is just, this is a nothing post. This is if you paid more for a company that you're acquiring and you have goodwill, that will be part of intangible assets. Or if you have some sort of non-real thing like a patent, that would be an intangible asset, and you put a value on this based on accounting principles. So once again, just to reiterate, we see cash and cash equivalents is not even covering total current liabilities in this case. So we see a weak balance sheet for this company. It's very high risk, and investors need to be aware of this when they look into this company. But as always, I really hope that investors make a ton of money, whatever investments they decide to make, and hopefully somebody is able to determine if the drug pipeline is looking good and hopefully make a killing from that. Alright, that's been it covering this company, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.